Have you ever wondered why the ultra-wealthy flock to tiny specks of land in the Caribbean? The Cayman Islands tax haven isn't just a sunny paradise, it's a meticulously engineered labyrinth of financial secrecy. Billions of dollars snake through invisible channels here, untouchable by conventional taxation. Stay with me, and by the end of this video, you'll see exactly how this offshore fortress operates and why it fascinates the world's richest people. Picture this: a small island, pristine beaches, turquoise waters. But beneath its calm surface lies a sophisticated ecosystem built to shelter wealth. The Cayman Islands tax haven functions less like a country and more like a vault floating on the ocean. Its laws, regulations, and corporate structures are engineered to minimize tax exposure while maximizing privacy. Unlike ordinary banking, here the rules are designed for invisibility. To understand this, consider your typical corporation. In most countries, profits are tracked, reported, and taxed. Every dollar leaves a paper trail. Now imagine a structure where profit can be routed through layers of companies, trusts, and partnerships, all legally opaque. The Cayman Islands tax haven allows exactly that. These layers create a maze so complex that the origin and destination of money blur into shadows, invisible to most regulators. It's not magic, it's system design. Offshore entities, zero direct taxation, flexible corporate laws. These ingredients combine to create a high-efficiency shield for capital. The real power lies in scale. A single corporation can redirect millions, even billions, without leaving conventional footprints. Understanding this mechanism isn't just about curiosity. It reveals the blueprint that guides trillions in global finance. For anyone interested in the engine of wealth preservation, the Cayman Islands tax haven is the most instructive case study you can explore. Step 1. Establishing a Cayman entity. A corporation, partnership, or trust is created under local law. This entity exists primarily on paper, but it wields real legal authority. Think of it as the shell of a vessel, ready to carry value across international waters. The Cayman Islands tax haven provides minimal reporting requirements, meaning the entity can hold assets without exposing them to external scrutiny. Step 2. Routing assets offshore. Once the entity exists, capital flows into it. Investments, intellectual property rights, royalties, or dividends. These streams bypass conventional taxation because the jurisdiction imposes zero direct tax. Imagine a river diverted into a hidden canal, invisible to the usual tributaries of government oversight. This is where the tax haven label becomes literal. Profits are insulated from the reach of domestic tax authorities. Step 3. Leveraging legal flexibility. Cayman structures can interconnect, forming multi-layered chains of ownership. A holding company may own several subsidiaries, each in different jurisdictions, each optimized to avoid reporting obligations. The result is a three-dimensional lattice of capital, where tracing ownership is nearly impossible. The Cayman Islands tax haven doesn't just provide shelter, it engineers invisibility at scale. Every step compounds the effect, establishing the entity, routing assets, layering ownership. Together, these steps turn ordinary money into strategically positioned, legally protected capital. The elegance is in simplicity, masked by complexity, a paradox that makes the Cayman Islands tax haven both powerful and difficult to scrutinize. Why do billionaires care? The benefits are precise, measurable, and extremely attractive. Zero direct taxation. Profits earned within the Cayman framework aren't subject to corporate or income taxes. A single offshore holding can save millions, even billions annually. Privacy and confidentiality. Ownership is legally shielded. Entities are listed on paper, but not on public ledgers. Your assets exist, but they are effectively invisible to outsiders. Capital mobility. Assets can move freely between jurisdictions without triggering conventional taxation or reporting obligations. The Cayman Islands tax haven acts like a traffic-free highway for money. Legal certainty. Cayman law is stable, predictable, and oriented toward protecting corporate structures. Unlike some countries where laws change overnight, here rules are designed to endure. Global leverage. Through the use of layered entities, one structure can hold stakes in hundreds of companies worldwide, amplifying influence and operational flexibility. These aren't speculative perks, they are structural advantages baked into the jurisdiction. For anyone analyzing global wealth, the Cayman Islands tax haven illustrates how law, geography, and capital intersect to create an ecosystem optimized for preservation, mobility, and secrecy. Understanding these mechanisms sheds light on the invisible corridors through which global finance flows. Other jurisdictions promise low taxes, but few achieve the combination of secrecy, flexibility, and stability that the Cayman Islands tax haven delivers. Take Delaware or Luxembourg. They provide legal structures, yet they both remain tethered to heavier reporting obligations and domestic oversight. The contrast is striking. While other havens offer partial protection, Cayman structures create near-total insulation.
For example, a U.S. corporation using Delaware may still face scrutiny from the IRS or EU regulators. In contrast, the Cayman Islands tax haven allows cross-border capital flows with minimal disclosure, making it a strategic choice for multinational corporations, hedge funds, and ultra-wealthy families. The advantage isn't just about paying less tax. It's about controlling visibility, timing, and legal exposure. Where other jurisdictions stop at compliance, the Cayman Islands tax haven builds a three-dimensional shield around assets, offering a combination of privacy, flexibility, and enforceability that few can match. The Cayman Islands tax haven isn't for everyone. It's designed for those handling significant global capital, corporations with international reach, and investors seeking structural efficiency rather than mere tax avoidance. If your portfolio is small or your financial activities remain domestic, the costs and complexity outweigh the benefits. Recognizable signs that this strategy may be relevant include managing multinational subsidiaries, holding intellectual property rights internationally, or coordinating trusts and partnerships across borders. For the right entities, Cayman structures act as a backbone for legal, efficient, and secure financial management. For those outside this realm, attempting similar setups may be ineffective or even legally risky. Step 1. Engage local counsel. The Cayman Islands tax haven operates under specific laws. Experienced legal advisors guide entity formation and compliance, ensuring structures meet regulatory requirements. Step 2. Choose the entity type. Options include exempted companies, limited partnerships, and trusts. Each serves a distinct purpose. Some optimize asset mobility, others maximize confidentiality. Selecting the correct vehicle is critical. Step 3. Fund the entity. Capital, intellectual property, or investments flow into the structure. Strategically routing assets through this entity shields them from conventional taxation while maintaining legal clarity. Step 4. Layer ownership strategically. Combine multiple entities across jurisdictions to create a lattice of control and privacy. For example, a holding company in Cayman may own multiple subsidiaries elsewhere, each structured to optimize tax efficiency and confidentiality. Step 5. Maintain compliance. Even in the Cayman Islands tax haven, Annual filings and local obligations exist. Staying compliant ensures the structure remains robust and legally defensible. While the Cayman Islands tax haven offers immense advantages, it carries costs and limitations. Formation fees, legal counsel, and ongoing administration can be significant, often ranging from tens of thousands to hundreds of thousands annually. For smaller portfolios, these costs may outweigh potential tax benefits. Legal complexity is another factor. Missteps in structuring or reporting can lead to regulatory scrutiny, fines, or reputational damage. Transparency initiatives globally are increasing. Authorities in the US, EU, and other jurisdictions are sharing information more frequently, slightly eroding secrecy. Still, for the ultra-wealthy, the benefits often outweigh these challenges. Consider multinational hedge funds. Billions in assets are routed through Cayman entities, legally minimizing tax exposure while preserving operational flexibility. Family offices managing generational wealth use Cayman trusts to consolidate control while shielding assets from direct taxation and public disclosure. Even Fortune 500 corporations employed Cayman subsidiaries to manage intellectual property, royalties, and intercompany financing efficiently. In every example, the pattern is clear. Legal structuring, disciplined management, and strategic routing of capital transform ordinary assets into highly optimized financial instruments. The Cayman Islands tax haven isn't a loophole, it's a systematically designed ecosystem. Understanding the Cayman Islands tax haven reveals more than tax savings. It exposes the architecture of global wealth management. Privacy, flexibility, and legal precision converge to create a fortress for capital. For those interested in the mechanics of ultra-wealth preservation, studying this system is invaluable. If this exploration opened your eyes to the hidden veins of global finance, subscribe to Fiscal Phantom and comment below on which offshore mechanism fascinates you the most.